Hello and welcome to BQ Prime. A very good morning to all the viewers. HEG is one company that is in focus today on the back of Q4 numbers that have been reported. The revenues are down a little over 8.5%. Profits are down 21%. The board has recommended a dividend of 42.5 and approved a further investment of up to around 90 odd crores in its subsidiary, which is TACC. What does the quarter have in store and what we could be expecting going ahead? Joining us on the show to discuss more is Manish Gulati, Executive Director at HEG. Manish, good afternoon and welcome to the show.
Good afternoon.
Manish, my first question coming to you is overall, if you see in terms of where the fourth quarter goes, how have the utilizations and volumes panned out? Because that was something key that everyone was watching out for.
Yeah. So in Q4, they were in excess of 75%, I would say. And as we close the year, 22-23, they were 75%.
Right. And in terms of volumes?
Yeah. So it's 75% of, we call ourselves 80,000 ton plant today. And from next month onwards, June onwards, our capacity will be complete at 100,000. So, volumes, today I'm basing my 2022-23 volumes on a capacity of 80,000. And what I'm saying is we did 75% capacity utilization.
Right. And taking the capacity expansion into consideration, everyone was aiming for April to be the month where we would see that additional 20,000 tons per annum coming on full swing. What are the timelines looking like for that addition?
See, in this plant, we have 5 distinct processes. 4 of them have already started, they're already in production. And the first one took a little more time. We had so many equipment from so many different European suppliers. We're just now closing it, and we'll be starting the production from that shop also starting June.
Okay. So, the key concern was that our utilizations had dipped from a 90% to a 60. We are back on track to 75% already, and we were expecting it to come to 70, but we've improved further than a 70 as well. When do you see it coming back to 90% levels?
See, 2023 is looks to be a tough year. We're already experiencing that as the year has started. And it seems that this pain will go on for next 2 quarters. The industry, if you look at our industry, everybody's capacity utilizations are at a lower level. And we were just hearing one of the industry leaders say that they will be working between 43 or 50% capacity utilizations. So these coming 2 quarters look to be under pressure, both on a volume standpoint and also on the pricing standpoint. But we expect the demand to recover from first quarter next year, calendar first quarter next year. And we are hoping to catch up on volumes in the later half. Right now, as we speak, for the quarter 1, April to June, we are still aiming at about 85% capacity utilization, maybe 80% capacity utilization. But next 2 quarters are not looking good from this for volumes as well as prices are softening.
Right. So overall, how is the demand scenario looking like, Manish? Because clearly the fall in utilization is also due to the lower steel production globally, right? Which has actually hurt the demand for graphite electrodes. But now taking into consideration the kind of EAF capacity that is coming on stream in the next 2 years, say till 2025, what does that demand actually tell us?
Yeah, you're right. See, between when the war started, the Russia-Ukraine war started, we at that point in time, that quarter, April to June, we were working at a capacity utilization of 90%, and the whole industry was doing well. And thereafter, there was a spike in electricity prices, spike in energy prices, which actually dampened the steel production in Europe and some other countries. But we lasted that time. Towards October to December, our capacity utilizations fell to a 60% level. And beyond that, after that, we have now started to receive more and more inquiries as people turned down their inventories. The real demand came back into the market. So we started seeing a little bit of volumes growth from Jan to March onwards, which you can see in our capacity utilization also. But going forward, this pain is going to last maybe another 2 quarters, we are still hoping that we should be able to do 70%, 65 to 70% capacity utilization in this year, even if 1 or 2 quarters are rough, but we expect the volumes to catch up. And the decarbonization efforts are going on vigorously. We can see plants coming up on the ground. Already about a 10 million metric ton fresh capacity has been added in US, and that is, even if multiply by 1.5 kg or 2, it's already translating into 15,000 ton extra demand. And if you look at the World Steel Association report, we are looking at the growth in steel demand of 2.6 or 3% in 2023 and 2024. So we hope all this will bring the demand back into the market. The switchovers from blast furnace way of steel production to electric arc furnace is definitely on its right path. But we still have this particular year to go through. I mean, next 2 quarters, 3 quarters to go through.
Right. And overall, if you see in terms of, the new lines of business that HEG has looked at as well, and that's specifically with regards to graphite anodes for lithium ion cells and its allied and ancillary products through the incorporation of one of the subsidiaries. How is that business looking like? And is this the same subsidiary where we are looking at putting another 90 crores with regards to capex?
That's right. The 90 crores is for that subsidiary. We are going to be starting that soon by procuring land, and it'll take, let's say, from day zero, it'll take probably 2.5 years to set it up. So it's a completely new line of business, completely different from graphite electrode application. It goes for batteries, and as EV business is catching up, and cell manufacturing will eventually one day be done in India, and they will be looking for components, and graphite anode is one of the essential components of that.
Right. So overall, we were looking at an investment of around 1,000 odd crores in the first phase. How much of it is already made so far? And taking into consideration it will come on stream only in 2025, what's the first year revenue generation we are expecting out of this?
See, right now I will not hazard a guess on that. I mean, as we start this year, capex for that business might not be much, because this year would be spent in procuring the land, getting all the kinds of environmental clearances, and maybe some advances go to some of the key equipment suppliers. But as of now, not even a kg of graphite anode is made in India. Otherwise, there's a huge demand for this waiting to happen. So it's a little early for me to hazard a guess for 2025, what kind of revenues we'll have.
Right. So overall, Manish, very lastly, my question coming to you is, if you have to look at FY24 and FY25 as a year, what's the kind of growth we are looking at, taking into consideration that now our utilizations are on an uptrend? Yes, as you mentioned, there could be some bit of weakness in between, but overall, what's the company pricing in?
On the 23-24 year, we are estimating our volumes to be anywhere between 65 to 70% capacity utilization on the basis of a 100,000 ton capacity. And that the 24-25 year, the next year, looks pretty good, because there'll be more and more furnaces which are going to get completed. By the end of 24, we are estimating almost a 25 million ton capacity to come on stream, translating to about a 40 to 50,000 ton additional G demand. And we were also, I mean, our industry peers, leaders are even more aggressive on that. I mean, we were looking at their papers, and they said they're estimating the G demand to be growing by 200,000 tons by 2030. So I think this is going to be a very exciting industry to be in the coming years, as the steel switches from blast furnace to electric arc furnaces, and electrode demand, I think, will continue to grow year after year for next quite a couple of years, I would say.
Right. So I think good plans that are in progress. Demand is in sight as well. It's just the timing that needs to be considered from here on for an investor as well. Thank you, Manish, so much for joining us on the show. As always, a pleasure speaking to you. Thank you for the insights. Stay safe and speak to you soon again.
Thank you very much. Thank you.